Welcome back to the Kohrs Show. I hope you're having an absolutely fantastic day. We're here to talk about breaking news, what's going on in the world of the markets, and of course, we're going to be giving some world-class relationship advice. We might as well call this episode Pump City because everything is ripping to the high heavens. It seems as if the hemorrhaging over the past 2 days has at least momentarily stopped because boy, oh boy, are we seeing a lot of green. Stocks pumped, crypto pumped. Hopefully your own personal account was pumping from the bottom left to the top right all day. I want to discuss why everything was so viciously bullish today and what you should be paying attention to in the short term to see if the party will be continuing. I also want to talk about how even though you probably made some money, and I very much hope you did, some of our favorite politicians, surprise, surprise, made even more. And then to wrap it all up, to put a little bow on the top, I want to give you the most recent updates with FRC, First Republic Bank, and the whole craziness going on there. So I hope you buckle up, smash the like button, and let's ride. Obviously, I'm not a financial advisor, but I'm more than happy to share some pieces of advice and some wisdom from my financial advisor with all of you.
Look, at the end of the day, if you really want to be prepared for the next crypto bull run, you need to, first of all, get a personal loan,
write this down.
Then you need to go open a zero interest credit card for 24 months, max that out, buy as much crypto as you can, put it all into Shiba Inu, and wait 2 years.
I'm well aware that many of you are probably typing away right now in the comments saying that this guy sounds exactly like Warren Buffett. Maybe he's even stealing advice from the Oracle of Omaha. And you're right. It does sound very, very similar to a lot of the financial wisdom that goes down from generation to generation to generation. I personally just like this guy. He seems to have a pretty cool vibe, and I like the way he really spins his message. You know who else could benefit from listening to this financial genius? The US government. An hour before the stock market opened today, we got the first reading of the Q1 GDP, and it wasn't so bueno. GDP report shows economic growth slowed in first quarter. Growth slowed to 1.1% annual rate as resilient consumers faced high inflation and rising interest rates. Just so you know, the expectations were anywhere from 1.9 to 2%, so we definitely came in under where we should be. In all honesty, this puts us in a little bit of a precarious situation. Check out this Bloomberg headline. US in worst of both worlds with high inflation and GDP slowdown. The US economy is slowing even before the brunt of any credit crunch stemming from the recent bank failures, SVB, Signature, and potentially FRC, while inflation accelerated, highlighting the enormous challenge faced by the Federal Reserve. Gross domestic product rose an annualized 1.1% in the first quarter, notably less than the median forecast of 1.9%. The slowdown was largely driven by an inventory drawdown with an acceleration in consumer spending providing the main impetus for growth. Now, this is where things start to get a little bit complicated. The Fed, which is the US's central bank, well, they have a preferred core gauge of prices, and that preferred gauge in the period from January to March picked up by 4.9%, which is actually the quickest pace in a year. Simultaneously, we were given another report that essentially highlighted how strong the labor market is. Now, before you rage quit because you're thinking to yourself,
what in the world is this kid talking about?
It all basically adds up to this. Wednesday, May 3rd, next week, if you're watching this in time, it is basically forcing the Fed, led by the chair, Jerome Powell, to raise the Fed fund rate by another 25 basis points, which is a fancy economic way of saying 0.25%. This higher rate will put more downward pressure on the economy, which should ideally curb demand and help with our fight against inflation. Unfortunately, when you consider the entire cluster of the situation, it's suggestive of a higher risk of a stagflationary environment. This basically means that inflation remains high while your economy is trending down, and it is not something any of us want. This morning's data was the worst of both worlds, with growth down and inflation up, at least according to some fancy chief investment officer. And to make matters worse, that is not the end of Powell's headaches. It sounds like he needs a little bit of a better scheduling or vetting process, but this is real and it's kind of sad. Fed's Jerome Powell tricked by Russian pranksters posing as Zelensky. Now, to be fair, I watched the whole interview and nothing really that exciting or damning was really said, but it still is kind of a public embarrassment if you ask me. At this point, it's probably fair if you're thinking,
hey Matt, you're telling us things that sound pretty negative. Why is the stock market and the crypto market rippity-skippity doo-dah?
And honestly, that's a great question. I think I can explain why. We live in the upside down. What's bad for the economy is good for the stock market, at least based on our current monetary policy. The Fed is deathly afraid of overdoing it, so if they start to get signs of maybe they went a little bit too far, the market could interpret that as maybe they're going to start taking their foot off the gas pedal in this battle against inflation, and obviously that would be better for the stock market, and that's why we see rips in the stock market when sometimes there's not so good economic reports. Obviously, that's an extremely high-level statement, and there's various aspects of this that need to be discussed in more detail, but I think that's a good basis to think of the current situation. Speaking of which, an hour before the stock market opens on Friday, April 28th, we will be getting another inflation report, the PCE report, the personal consumption expenditures, so make sure you're paying attention to it because it's going to prompt a lot of volatility in the market. It'll have quite the influence on what the Fed decides to do in the next FOMC meeting, which once again is Wednesday, May 3rd. Now let's get into the really fun stuff. The market was Rip City today. Stocks, crypto, futures, options, everything was screaming to the high heavens. I really hope that you made a killing on the day, but you know who we know made an absurd killing? Our politicians. Remember this headline from a mere one day ago? Meta shares popped 12% after company reports first sales increase in 4 quarters, issues optimistic guidance. In fact, it was such a seismic beat that it lifted the entire indice. Nasdaq jumps more than 2% as Meta fuels big tech rally. I'm sure many of us are applauding as things are rocketing higher and higher, but there are a few people, specifically within Congress, that are clapping a bit harder, such as Dan Crenshaw. Shout out to the Twitter account, Nancy Pelosi Stock Tracker. Remember when Dan Crenshaw bought Meta on October 25th and shortly after argued for banning TikTok in the US? Well, he's now up 75% after reporting strong earnings, and he continues to be one of the best political traders, Republican, Democrat. It just keeps happening. It's almost as if they know something. And just for the point of thoroughness, here's a screenshot of Crenshaw's actual trading report. In that time frame for October, you can see he bought Alphabet, Amazon, Apple, and Meta. As of now, 2 of which beat, and it does seem as if the other 2 are about to beat. But don't you worry, the fun doesn't stop there. Do you remember this headline from 2 days ago? Microsoft reports earnings beat, says AI will drive revenue growth. While you might be stoked about your gains, Nancy and Paul Pelosi are definitively popping bottles of champagne at the club. The Pelosi portfolio strikes again. Back on March 19th, Nancy Pelosi exercised her Microsoft calls and bought $10 million worth of the stock at $130 a share. Today, Microsoft popped 8% after strong earnings and is now $300 a share. That equals a 130% gain on those shares, or potentially an $8 million profit. And then here's a screenshot of what she did in March. Not only did she exercise those puppies, she loaded up even more. Honestly, I think this is a good point in the video to take a quick break and give the Pelosis, both Nancy and Paul, a round of applause, because as a duo, they are some of the best traders this world has ever seen. Congress is pressing federal agencies to better police their official stock trading, while the Energy Secretary became the first cabinet member to signal support for banning such trading. The developments are the latest fallout from the Wall Street Journal investigation, revealing that more than 2.6 thousand government officials across 50 federal agencies had reported investments in companies that stood to rise or fall with the decisions made by their agencies. Now, that might sound crazy to you, and the simple answer is because it is. It is crazy that our elected government federal officials are able to wheel and deal in the things that their own agencies have clear power over. We do live in La La Land. You are right to feel that way. Don't let any of them tell you otherwise. Realistically, will anything happen with this push? I don't know. We've seen this in the past, and if anything, it seems like it's just a tactic to pander for votes, because these people, why would they not want to keep lining their own pockets? No one said you had to be moral to be a politician. You might as well get the power and, improve your own financial situation while you're there. It's obviously absolutely disgusting, but we're banking on them self-policing, and it just seems to be a thing that has not yet happened. I don't want to hold my breath on it, but I will still be optimistic. Switching things up, here's the most recent update on the whole First Republic Bank, ticker symbol FRC debacle. Even though I had a really good day in the market, the overall situation is still a little sus. First Republic faces potential curb on borrowing from the Fed, which would not be good. FDIC considers lowering bank's rating if deal isn't reached. Doing so would likely limit firms' access to Fed's facilities. This would make the bank's operations very difficult to run if they're cut off from the lifeline that is essentially the government.
First Republic really would find itself in a position where should regulators make this decision to review its private assessments and to downgrade it, it would be in a position where it couldn't necessarily borrow from the Fed's discount window should it be downgraded, as well as the emergency lending facility regulators launched earlier this year. The bank does find itself needing to make a decision, but its managers are looking at a number of options. The FDIC wants the bank to consider a private buyer, whereas the bank itself is really concerned about its reputation and the current standings for its existing shareholders.
Well, would you look at that? The closing bell just went dingity ding ding ding, and man oh man were the bulls flexing their muscles today. The S&P 500 gained 2%, the Qs gained 2.7%, Meta, Microsoft, Amazon, Apple, and FRLC all notably in the green, and it didn't just stop there. Both Bitcoin and Ethereum did very well. Now granted, they didn't return to the peak that we saw yesterday, but they definitely had a nice upward movement. Speaking of which, as I'm filming this live, Amazon just dropped their earnings, and it looks like it was a top and bottom line beat. Amazon shares jumped more than 10% as cloud advertising units drive revenue beat. On the flip side, Snapchat did not do so hot. Snap plunges on first quarter revenue miss. So with all that in mind, to close out the week, in terms of the overall market, I'll be watching that region between 413 and 414 for an upside break. And if things get rejected or if the overnight session isn't too nice to us, I'll be watching 410, and below that, I'll be watching 408. With respect to seasonality, which is obviously not a guarantee, tomorrow strongly favors the bulls. Based on the past 25 years worth of data, the bulls have won 60% of the time and a very impressive profit factor of 3.27. Like I said, this is not a guarantee, but obviously, it does seem as if right now from a quantitative perspective, the bulls are favored. I appreciate you making it to this point in the video. Your support is truly appreciated. I hope you have a beautiful day, and I'll catch you in the next video.